JC, what's going on? What are you trading here this morning?
Man, we own a ton of wheat, guys. A ton of wheat. Last week, as usual, you guys are asking me different names and everything like that, and you're like, well, what are you trading? What are you doing? I told you guys I like the wheat, and I love it. I absolutely do. I actually bought more yesterday. I really, really like this trade, guys. And
What's the ETF on
morning,
that?
it's already moving almost 2%.
Okay.
PAT.
W.
It's not the most liquid ETF. EAT.
Okay. All right. Do you trade?
That'll give you exposure. I'm in the futures.
Yeah, I was just gonna say that. So did was it the crop report or what did what's getting it going here?
For me, guys, it really is the perfect storm. So, win, lose, or draw, it's something that I have to be big in, simply because it's my discipline. I'd be, doing my investors a disservice if I wasn't, huge in this particular commodity. You have key support from last September. We undercut that support and came back. So you guys know how much I love my failed breakdowns. So I love that. You have a key trend line, uptrend line on the longer-term chart that goes back to the lows way back in 2007. You have bullish momentum divergences on both the daily and the weekly time frame. From a seasonal perspective, there have been a lot of bottoms historically in wheat in the month of April and May. From a sentiment standpoint, the commercial hedgers, the smart money, these guys are loading the boat. Meanwhile, from a pure sentiment poll standpoint, wheat is one of the most hated commodities out there. So what do I like about it? Everything, really.
Okay,
Sure.
JC, we got Rob Hood in the chat here, and he's just asking you. I mean, we've heard you mention several times about the downward sloping 200-day, or 200 SMA. Now, this is trading, way below that in the wheat. So, what are the factors that are overruling? Is it the reversal that it had? I mean, when looking at your rules and stuff, he wants to know, why you're in this one, and you could just go over again what you were talking about.
It's a mean. Yeah, well, I'm not married to this. I'm not buying this because I think it's going to triple. It's a mean reversion trade. I like it to 530. I'd be fading it at that 200 day.
Okay,
So you still...
I don't like owning stocks that are, near the 200 period moving average or something like that. I wouldn't touch it. But as a mean reversion, 100%.
Okay, let's move on to the bond market here, and bond bull for a long time, bond bear here. The utilities, the TLT. I mean, economic data coming out doesn't look like they're going to raise rates here. It's just what is your thesis behind this? Is it just people just getting out of the bond market?
For a long time last year, I was a bond bull, as you guys know, and then we hit our upside targets in January, and then started coming off. And then in March, when we got that bounce in March, going into the second quarter, told you guys that bonds were a short, because I figured we'd get a mean reversion in the yields back to that 200-day moving average, very similar to what I think is transpiring here in wheat, for that matter. And we got it. We got a beautiful mean reversion in yield. The bonds got destroyed. We were short, so we're happy about that, obviously. But targets have been achieved. And same, you guys asked me about it last week, and I told you what's going to happen now. I have no idea. I'm not in it. It's a tough trade here. I don't know what's going to happen. It's not for me. But bigger picture, longer term, I'm still in the camp that rates stay down. They're not going to do anything this year. But as a trade, from a tactical perspective, what do we do with bonds? I just think there's easier trades out there. If you missed it, if you missed this sell-off and you didn't short it in March, what are you going to do with, you missed it. So it's too late now, I think.
JC, House of Mouse, Disney, you were short that thing. It's actually performed quite well considering from a relative strength perspective because this market is trying to break out, but Disney can't seem to get back up over 110. I kind of like it from the short side on a relative weakness perspective here. You still in the name here at short Disney, and what's your target here if you are still short?
Yeah, I'm still short. I think it goes under 100. You know, I shorted the common. You know, I think we can be short the common as long as we're below the April 27th highs, right? So as long as we're below that, if we're above that, that's the stop. So I'm short the common. I haven't touched that position, but my original position had put options, the May contracts, which expire tomorrow. So earlier in the week, I believe on Monday, I rolled that over. I took profits on the May put options, and I took those profits and rolled them into the June put options to give myself a little bit more room. So that's really the only thing I've done on that trade. I've just kind of just been watching it. You know, we've made a little bit of money. You know, nothing really to write home about. See, I have my P&L here. Yeah, you know, a little bit of money. Nothing crazy. Yeah, I'm still short.
What was the trigger on that one, JC?
You know, it was the exact same trade as biotechnology on March the 20th.
Okay.
If you recall, that was the day, you know, Biogen came out with whatever. It was a Friday, and then it started fading all day. You know, exceeded our target on that particular day, and then faded. So that was the entry point on the short, which worked out very well. Is the same exact thing. You know, it went through our target, which was 111.70 on that day, and then faded all day. This was on May the 5th, and then faded all day and got a nice follow through. So what's the trigger? It was literally the same thing. You got a bearish momentum divergence. You know, I think if we take out Wednesday's lows, I think this thing's really going to get crushed. But from a beta standpoint, which is one of the reasons that I'm short the common and own the put, is that it's Disney. It's like the most boring stock ever. So, you know, you need the juice. You're not going to get these 5-6% back-to-back down moves like you are in biotech that are crazy. You know, this is Disney. I mean, it doesn't get more boring than this, but, you know, we can make money in boring. That's okay.
Yeah, right. Whatever pays the bills. Moving on, you know, social media ETFs, social. I know it hit your target, and we've had a pullback here. Do you kind of just push it aside and, you know, the trade's over, the trade's done with it, or did you look for a re-entry on it?
No, I haven't touched it. This isn't for me. You know, hit our target. You know, it's been a little choppy. I mean, structurally, bigger picture, do I still like it? Yeah, I still think we have room to the upside. You know, we can see 23 on the social, but nothing that I'd be buying here. Nah. You know, we hit our target. I mean, we nailed it. You know, we were in huge. You know, we got the breakout we wanted. Beautiful follow through. You know, the market's doing nothing. Social's ripping. I mean, that was a great period for us. But at this point, you know, if you weren't in it, you missed it. You know, I think I need some time to digest. Totally.
JC, I want to talk a couple of these big Momo stocks here. And Netflix has been on a tear. Back in January, had the gap and go, consolidated a bit. Last earnings report has had the gap and go. We started getting life there again 3 days ago, made new all-time highs again on Netflix here. Are you playing Netflix, and how are you playing it?
I'm not in Netflix, but I like it. I think it goes higher. You know, I told you guys I didn't believe in triple tops. You know, when you look at the top from last February, you know, again in September, and then we kissed that again in February. You know, I just don't believe in triple tops. I think the more times the level was tested, the higher the likelihood of break. We got that breakout beautifully last month, and I think it keeps going. You know, short term, I like that little flag that we were seeing in April. Love it. I think we go to 700.
700? 700? What about?
It's hard. You know, it's really hard for me.
What about 600? You got to get to 600 first. Okay, JC, moving on to some of these retail stocks. I know
to get to 700, we got to get to 600 first.
Right. What the, I know you look at different things. You like to trade your plan. I mean, when you see something like, Coles pop up on your screen today, they had a little bit of a miss. And they are just getting punished here, bouncing a little bit into pre-market. Is this, I mean, you talk about mean reversions or standard deviations. Is this something that, you might keep an eye on today over the next couple days?
The Coles, absolutely not. Coles ran into the 2007 highs. This was in March, late March, early April, and it ran into the '07 highs, and it's getting destroyed. So if you're in it, you deserve to lose money. I think when you approach such historic resistance, to assume that you're going to run through there like it doesn't even exist, I think is irresponsible. I think if you're in it and you're losing money, I think it's justified personally. It's actually it's the reason we're short Taser. We're short Taser very aggressively up here.
Really?
I'm not saying it's going to get crushed, but yeah, we're short Taser just because we ran into that former resistance. I mean, it's that simple. The resistance from back at the end of '04, early '05. So it's the same trade, in my opinion. In hindsight, I wish I was short Coles and not Taser, but we'll see what happens.
You know what? I don't mind that Taser short. I was actually looking at that thing this morning here. It's bounced back, and I was looking, man, you know where your out is? You got a nice little double top from just a week and a half ago, around $35. Stock couldn't get up there yesterday, kind of pulled back after, another contract there it signed, and it closed near the lows. I kind of was looking at that thing too and thinking, now you see DGLY, not that it's purely related, but it's getting murdered here off its earnings report here. And I was wondering about the Taser short, and I was thinking about actually trying to put some of that on. And you're telling me you are shorted, so you're a day ahead of me here, JC.
Yeah.
Nice job.
Okay, and
I started shorting it. I started shorting it already last week.
Nice.
Yeah, last week I started shorting Taser. I actually shorted more yesterday.
Okay, we were talking about that. We were doing the math with Brent here, and some of these contracts that the algos are buying them up on. I mean, some of these are $300,000-$400,000 contracts. I mean, it's just the repetitive. There's just been so many of them, but the algos pick up the headline, new contract, and they don't spend the time to do the math on it. But we'll see. It's definitely back up to some long-term resistance here. Just overall market thoughts here, JC. I mean, we've been in the trading range. We're bumping up here against new all-time highs here at near the end of earnings season. Anything to keep an eye on?
I think it's the same theme. We've been neutral ever since March 20th. So for almost 2 months, we've been neutral on this market, which, we're fortunate to have been because, I know a lot of people getting whipped around in this mess. And, again, I think it's justified. We're below overhead supply in all the major indexes across the board. So, a chop fest is to be expected, I think, to me. The one thing that I'm worried about, that I'm concerned about, is the trannies. I mean, look at those transports, the Dow Jones Transportation Index. Man, if we break that support, from the last several months, I mean, man, that could be really, really bad and detrimental to the market overall as a group. So I'd keep an eye on that. I mean, I personally don't care. I guess I have between Disney and Taser, technically I'm net short just because of those positions, U.S. equity. So technically, I guess I'm rooting for a break, but not really. I really don't care. But I got to tell you, man, if that breaks, I'll start to get much more bearish structurally, and I think that'll be a sign of more to come. So if you're an optimist out there and you're long stocks and you want things to be good, you want these trannies to hold. I'm telling you that right now.
Okay, those you're talking about those early May or the lows that we had from 4 or 5 days ago, then, right? And that corresponds to the end of April. Is that what you're referring to?
Yeah, I mean, you could even go back to December. It's more of like an area, right? It's not like an exact.
I see it. Yep.
Penny, game over. But it's like an area,
Yep. Yep, not trying to pick the exact point, but having an area. I just went to the weekly on that, JC, and it's much more well defined. JC Perret, he's the founder of Eagle Bay Capital,
Yeah.
money manager, technical analysis practitioner, and blogger. He's a Marketfy Maven. Check out his product on marketfy.com. JC, a pleasure as always. Have a great trading day. We'll speak to you next Thursday.
Thanks again for having me, guys. Have a good one.
Thanks, JC.